So welcome to our 2021 crop insurance update. This is Corey. I'm with KW Insurance, and normally we do this in person. I'm hoping that this is our last meeting that we need to do virtual here, and we'll be over the hump on this COVID thing. So let's get started. I'll roll through this as quickly as possible so that you guys don't get too bored. Anyways, the first thing I'm going to cover is our Ben Taylor Inc. side of our business. That's the chemical retail side. We've moved that office now in this Sunburst warehouse, or this Sunburst location, out to the East warehouse, which is the big warehouse for Taylor's here. That'll help you guys as far as being more convenient. You can always walk in there and we'll just invoice you at the same place you're picking the chemical up, and it also allowed us to have some more office space and separate things for COVID. So the second thing we want to address in that is, as you guys know, Greg Taylor died, which is a real bummer. And because of that, this spring they've decided to put their business up for sale. This is going to be a long process, like a year or two out situation, but I'm sure you guys heard rumors that it's for sale, and we just wanted to address the fact that for this crop year, the business will continue as usual for sure on the chemical side. Going forward, Wendy and I, of course, will work with whoever ends up buying the business, and we'll try and figure out a way to keep that rolling up here for you guys too, because we really appreciated the support you've given us on the retail side of that business. So there's no reason to think in the future it won't roll on as it was, because one of the stipulations in the sale is that they are going to sell the whole thing as one big package and not individual locations. So other stuff we do at KW Insurance, other than crop insurance, we do home and autos, farm policies. We do a lot of those where you would insure your grain bins and your combines and the liability part, life insurance, and then any commercial type stuff you guys might need done too. So if you have other insurance quotes that you need done, we actually have a staff of 3 PC agents that do nothing but that. So there's always someone here to service you, and we have a lot of companies to quote through. Just on the farm side alone, we can quote through Farmers Union, Farmers Alliance, Liberty Mutual, Chubb, and Nationwide, just to name a few of those. So we can get really competitive quotes for you guys on no matter what kind of insurance that you need. And I hope that our service is better than anybody else that you could find around here for that. So ways to save on premium on that stuff. On your farm policy, check the current limits on your farm machinery. That's one of the biggest things. So if you bought a combine 5 years ago that was $300,000, it might only be worth $150,000 now. If we don't adjust the limits of that machinery backwards, you're going to continue to pay premium on that $300,000 piece of equipment. So review the limits on your machinery. Consider covering all that machinery under a blanket, which means just one big value with all the stuff kind of listed underneath it. That actually drops your premium some when we would work up with it that way usually. And then quote with different carriers, of course, which we would do for you on your renewal if we thought something was out of whack. If we already have your policy. If we don't have your policy yet, all we need is a copy of your current deck pages. So the stuff they sent you on your renewal that lists your equipment and locations, drivers, all that stuff. We'll plug all that into the computer for you, and a list of drivers and their driver's license numbers and their date of birth. And then at least we can run a quote. It won't cost you anything. It shouldn't take a whole bunch of time, and we can see if we can be competitive anyways for you there. Same thing on the life insurance. Darcy and Renee are both licensed life agents. And so if you guys are interested in looking into any kind of a life insurance policy, they would love to help guide you guys through that as well. So on to the crop insurance side. So the crop insurance updates we're going to cover. There's some stuff that changed for the 2021 crop year. Flax and hemp were insurable starting in 2020. We're just going to review those two crops and maybe some of the different rules and that would pertain to them from the other ones. There's a change to the malt barley endorsement for this year we're going to go over. You obviously are going to complete your checklist and pick your levels. Normally we would do a lot of this at the in-person meetings. Darcy and Lynette have really been working hard to get out ahead of this and call you guys. So the time you're watching this, maybe a lot of you already picked that, but you may pick something up in this video that may trigger something you want to change too. So please continue watching this if you have the time. Then predictions for PLC and SEO. We ran, if you look at our separate SEO, ECO video that we made, which ECO is the new coverage that will allow us to go to 95%, you're going to see that program, both those paid returns over time, at least historically, for the last 5 years, would have paid returns pretty much in every single county that we quoted in. So PLC is not going to pay as much this next fall just because the price of wheat went up, but that's actually a good thing, right? I think we'd rather take a higher wheat price than continue to get these big government checks. So on our farm, We just always review kind of what we changed for the year for you guys. So if you have questions on some of these practices, you can get a hold of us, and we're always happy to help there too. We switched from a hoe drill to a disc drill. Had really good luck with that. With the case disc drill, cut all our starter fertilizer in half and reduced the N we applied, and still had some really pretty remarkable crops for not putting down hardly any fertilizer and having very little rain. So we can go through that with you in a separate farm video too that I'll post down here. Second year, no seed treat with no issues. So we are just treating the seed with biological stuff and no more fungicides. It's our second year of intensive grazing. The first year, of course, we just intensive grazed across it, but didn't see a big improvement in the grass because that was the first time across. The second year, with not a lot of rain, we saw a remarkable improvement in grass, and then we're hoping going forward every year that's going to continue to improve. So that's been a win for us here, I think. Accepted in the equip contract for the stripper header and soil health stuff. So if you guys are interested in running a disc drill and a stripper header and maybe seeding a cover crop 1 out of 5 years in this thing, I would look into it's called the Great Falls Area Tip. That program on about 600 acres, I think is what they would allow us to put in there. It'll pay about $20,000 a year to pay towards getting a stripper header and a disc drill going. So some cool equip programs you can look into. We only got 7.5 inches of total precipitation last year, followed by only 6.5 inches in 2019. So we've been in multiple years of droughts, and we still average pretty close to 40 on recrop wheat and about 50 on recrop barley. And the 2 crops that fell down in that drought scenario were canola. It only ran about 12, and the mustard only ran about similar, I think, 10 to 12. So those brassica crops really need that rain in July and August to make things kind of work out. We're hoping we're going to do some compost tea and some biology that we're going to put on these crops that I hope pulls them along a little bit farther, even in a drought scenario. Last year, we also eliminated all the seed treat on the chickpeas. That's a risk on the crop insurance side because technically if they got ascochyta and died out at that point, they would be uninsurable. So we did that without any issue though, so that was promising as well, because we would really like to avoid ever putting fungicide in the soil anymore if we're going to try and ramp up the soil health. So that covers kind of what we're doing on the farm. Now we'll get into the crop insurance side of things, which is probably mostly why you guys are watching this. So first off, just really quick, like we're going to cover, like looking at your schedules of insurance. Most of you guys, when you guys give us your maps from the FSA, we input that into the computer just like the FSA would do, and we'll crank you out a report, which is a schedule of insurance that'll have color-coded fields for everything that you seeded. At a minimum, please double check that these fields are seeded to the correct crops, right? So in this scenario, the smooth peas are marked with an S with the blue color. The chickpeas don't have an S, they're just blue. And then all the wheats are green and the barley is orange. And you can see the color coding of this when you go to the next page on your schedule. It'll summarize all the acres out of what you have seeded of each crop, and it'll also show you the colors for that map on the previous page. So it's a really good way just to double check that something's not way awry with your insurance. We double check against your 578s as well. But if you missed giving us a farm or something through the 578 that we had no idea that was getting added, and you didn't catch that we were off on the crop insurance acres, that could be a serious problem and a claim, right? So the next thing is inside your schedule. Then this will be the third page in. There's going to be section by section or view by view summaries of all the crops seeded in that unit basically too. So this one had smooth peas and chickpeas on the same field. You would look down below in those keys and it'll even give you your guarantees per acre and what the premium is by field on there. So if you guys really want to get more in depth into these schedules, please come in and sit down, and I would just love to go through that with you so you can understand your crop insurance better. On the back page of those schedules, it's going to summarize all the crops out and then split out the 2 programs. So like everything's an SEO on our farm. So we have a barley revenue protection line, which would be your underlying coverage here. Our premium liability was $74,000 on that. The SEO line, as you look across here, was $10,000. So if the county triggered, $11,000 could trigger on that. And then your insured premium in the right-hand column shows up over here for the 2 different practices. So the very back page will really kind of summarize all that out for you guys. One thing, if you are a beginning farmer and rancher, or if you have kids coming back or are a veteran farmer and rancher, you get a sizable discount on your crop insurance. If you were in enterprise units and getting an 80% subsidy already, if you get certified to be a beginning farmer or rancher, they'll add 10 more points of subsidy, which will get you to 90% subsidized on your crop insurance premium, or cut your premium in half versus a neighbor's or another person that's not a beginning farmer rancher. How do you qualify for that? If you guys haven't had an insurable interest in a farm or ranch for more than 5 years, and we can exclude any year you were in college or in high school or in an active duty in the military, if you haven't had more than 5 years experience outside of when you got outside of college or anything, then we can get you this beginning farmer rancher discount. We just need to know that. So if this fits you, or if you have a kid coming back and you want them to get that discount, the biggest thing is don't add the child that's coming back into your corporation, because that history is going to follow the corporation. Have them create their own entity and start farming on their own if possible, because it's a pretty sizable discount there for that. We need to fill out a beginning farmer rancher app before the sales closing deadline to qualify. That sales closing date's coming up on March 15th. So please let us know if that would fit anything that you guys are looking at doing. Native sod breaking, we cover this every time, but the Farm Bill really discourages sod busting. Any native sod broken after February 7, 2014 will receive 65% of the county average for the first 4 years it's seeded to an insurable crop. This is a change that started in 2020, so there is no way to get out of this penalty for the first 4 years that you seed it to an insurable crop when you break native sod. Also, your premium subsidy will be reduced 50 points, so you'll basically be paying pretty much all the premium but only getting 65% of the guarantee on this native sod when you break it out. Now, if you break 1 or 2 acres at the end of a field, you're only going to be penalizing that 1 or 2 acres, not the whole unit. If you're going to go out and break up 100 or 200 acres of native sod, this might be a real concern for you guys, because there's really no way of getting around paying that premium subsidy penalty until you seed it for 4 crop years to an insurable crop. So always talk to the FSA before doing any new breaking. It'd be bad enough if we ended up charging you more because your premium subsidy was taken away. If you don't meet the FSA's requirements for native sod breaking, we could lose all of your FSA payments, including your PLC, your crop insurance subsidies, and even like your CRP or EQIP payments. So don't go breaking up anything on your maps that shows up as native sod without discussing it first with the FSA. CRP breaking. This is another one where people get confused a lot. There's a lot of CRP coming out. Some of it came out for several years, and then the landowner maybe had it hayed for 2 years or did nothing with it, and then decides they want it farmed. Well, in that scenario, that becomes new breaking. So let's walk through what determines if CRP breaking gets 100% of the county average, or if you're going to have to classify that as new breaking. So if you break it out within 2 crop years of coming out of the CRP program, then you get to use 100% of the county average for that crop. On top of that, there is no date that it has to be broken out by to be insured. So here's an example. We're going to say the CRP came out in the fall of 2019, so that'd be normally in October, right? As far as our crop insurance considers that, the fall of 2019, just like if you seeded winter wheat then, would be the start of the 2020 crop year. That winter wheat would be your 2020 crop, right? So if it got broke out in the fall of 2019, you have 2 crop years to get that seeded. So you'd have the fall of 2019 to seed it to winter wheat if you wanted. The spring of 2020 would still be the 2020 crop year. And then the fall of 2020 would start the 2021 crop year. And so you'd have the fall of 2020 or the spring of 2021 to get that seeded before it becomes new breaking. So it's really pretty important, if you can, to get this CRP when it comes out to fall within that timeline. If it doesn't, then the new breaking also falls under reduced yields, for one, so you're probably going to get 80 or 65% of the county average once we get outside this date range. But also, you can't then do something like wait till the spring and spray out that old CRP ground and seed it to a crop and have it be insurable, because on the new breaking request, it had to be sprayed out in November the prior year. Or hay it not spray it out right away and let it go till fall and want to spray it out and seed it to winter wheat, that won't be insurable if we get outside this 2-year range, where it is fine if it's still within that CRP grace period. So, added land's another one. If you guys are looking at adding land to your operation, you can go up to 2,000 acres before we cap this yield rule on the added land. So if you get any added land all congregated together for the crop year and it's under 2,000 acres, we can use the better of the county average, or we can average all of your crop insurance units together in the same map area to give you a yield for that land. So that can be a pretty big deal if your existing yields are quite a bit higher than the county average. If you're adding this land and it's under 2,000 acres, we could average all your other yields on similar units to use for this new land. If it's over 2,000 acres, our only option is to use the county average for the yield. So if you're looking at adding land, there's some things we can do to structure maybe your agreement or something so it only shows you're adding under 2,000 acres 1 year and then the rest of it the next if it's over that much. If that's not possible, then at worst case scenario, you just start with the county average and all that added land. So on your check sheet that those guys go through with you when they call you, there's all these questions on there, and I'm just going to roll through them really quick, so that I hope you understand the ramifications of some of these things changing. So, has anything changed in your entity structure or your landlord's entity, like a death, a marriage, a divorce, adding a shareholder, etc.? So, if you did something like it was just you and your brother in the corporation, and now you've added another person as the third share, and we do not add their social security number in there at the sale closing date, if there's a claim, they catch it, they would actually take away 33% for whatever share that person had in the corporation away from your loss payment, and you would still owe all the premium, basically. So big deal to tell us if there's things that change in your entities. In any county in which you farm, do you have less than 3 years of experience growing any crop? The reason we ask you that is if you have less than 3 years of experience growing flax, let's say, you would be a new producer and you'd get to use 100% of the county average. If you had grown flax 4 years in the past and it wasn't insurable, so we have no record of it, you're not a new producer, and if we don't add those yields backwards into your history for flax, now that we can insure that on your policy, you'll have to start at 65% of the county average. So pretty important if you're doing some of these new crops that we can now insure to either figure out if you've grown them in the past or if you're a new producer for those crops. We just covered the CRP breaking thing, so we'll skip that. And then if you're growing some crops that aren't insurable through us, we can usually get insurance on those. So like if you want to try buckwheat in Toole County, we could probably get that insured for you, but we need to know before this March 15th deadline, probably several weeks before, so we can get the written agreement in. Now that works as the government will just, we'll send the written agreement off, tell them where you're seeding this, find some comparable areas where it has been seeded in different counties, and then they'll come back with a yield for you and a premium, and you can decide whether you want to reject that or you want to accept it. And if you accept it, you'd have insurance for that crop year, for that crop that isn't insurable in our county. So if you have a malt contract and we check the malt endorsement, you are required to add the malt contract to your insurance. So that's why we ask you if you have a malt contract for this year. And to insure mustard, you have to have a contract. So that's the next thing on this is, do you have a mustard contract for this year? If you want to insure the mustard, you have to have a contract. You can't grow it open market. The flip side of that is we can use whatever price is on your contract to establish your coverage. So on the mustard end of things, just make sure if you want to insure it that you have a contract, right? We're going to go through unit structure and stuff as we get farther into this presentation. So what's our projected prices for 2021 for the crop insurance? Winter wheat came in at $4.98. That was kind of before we had the run up in the wheat market here. So that price is set at $4.98. If the price stays up through harvest and you're short bushels, they'll actually pay you more per bushel for every bushel that you're short. That's part of the revenue protection thing. So winter wheat next fall averages out at $6.50 a bushel, let's say. And you're short some bushels below your bushel guarantee, then you would get paid $6.50 a bushel for every bushel that you're short. This spring now, these commodities have run up pretty good, and so spring wheat now is averaging in at $6.49 a bushel. We're near the end of the average. This is still an estimate, but that should come in really close to that. Durum is $6.74. They just pick premium amount to put durum above spring wheat every year, and this year it comes in about 30 cents higher. Canola is about as high as it's been in the last 4 or 5 years on insurance, so we're looking at 20.2 cents. That'd be a little over 10 bucks a bushel for canola, so that makes that a little more appealing crop from a guarantee standpoint. And then on barley, we can increase this price per bushel if you want to use the malt endorsement, which a lot of you guys will do. If not, feed barley now is $4.15 a bushel. That's based off the corn market. That's the highest feed barley too, has been on crop insurance in I can't remember how long. So optimistic things here as far as crop insurance guarantees. Better than the $100 an acre we probably had on recrop spring wheat in the past, just because the prices are higher. Pulse crops, we don't know the price of those until we get to the very beginning of March, which is a real pain because you guys have to make that decision in about 10 days. And you don't know where these crop insurance prices are at till then for guarantees for kind of deciding in your crop rotations. But they usually come out within a few cents of where the contract prices are in our area. So green peas and yellow peas last year were 9 cents. I'm guessing they'll come in about 11. That would get you around $6.60 a bushel on average between greens and yellows. The large, small kabuli chickpeas, they're still kind of depressed, that market, so I put 16 cents on there. Like I said, these are guesses for now. The large kabulis, I put 18 cents. That price has come up in the last week or so here, so hopefully we can squeeze maybe 20 or a little higher out of those. And then lentils have been pretty steady around 20 cents, so that's probably a pretty close guess for your base price on that crop. Like it says here, your official prices won't be released until March 5th, but that's our best guess for now. So in 2020, are you going to get paid for your SEO for most of the crops for the 2020 crop year in Toole, Liberty, Glacier County? The yields were pretty good in those counties, so it's of all the years, this is probably the most unlikely that will happen. Those yields will be released in March. The good thing is we actually had a pretty good year last year in general in all these counties, and so that's how this program should work. The prices went up and the yields were okay, so if there's every year it shouldn't trigger. Last year probably will be it. That being said, the price did go down on some of the commodities from where they started at for a base price, so maybe that'll come in far enough that it might trigger some small payments on SEO, but we won't know till March basically on that. 2021, just like we just reviewed these prices, they have inflated prices from where we have been the last few years. The higher your price is on your base price starting out on SEO, the more likely that program is going to pay, because when the price drops off in the fall, if that were to happen, that makes it a lot easier for this program to trigger. So I think for 2021, unless we have a pretty good year yield-wise, there's a decent chance that we might trigger some SEO payments again. On PLC, which if you guys are in SEO, you had to be in PLC, right? That program, it appears, is going to pay again for the 2020 crop year, which you'll get paid in October of this year for that. Right now, barley's running at about 25 cents a bushel and wheat at 50 cents. In comparison, last year, wheat, I think, came in at about 90 cents. Obviously, the commodity prices were worse in 2019 than they were in 2020, which explains why that is. And then the barley just always sort of floats for some reason around between 40 cents and 25 cents on this program, it seems like. But it appears it should trigger a payment again on that too, hopefully. We're quite a ways into the average now. So this is as of February 9th, as you can see. Especially on the wheat side, there's so many sales that are weighted the July, August, September timeframe that we should be pretty certain we're going to get a PLC payment on wheat again for next fall. Other money available, the deadline to get signed up for EQIP is March 13th. I believe that's still correct anyways. There is money available, like I said, to get started in diverse cropping rotations. Stripper header and disc drill, cover crop type stuff. So I'd check on EQIP if you're interested in some of that soil health stuff or water improvement for cattle. The CSP program roughly pays $40,000 per year. You cap it out at $200,000 anyways. Most farms would cap it out if you get accepted. We just got our farm re-enrolled in this program, so over a 5-year period, that's a couple $100,000 on stuff that's not costing you near that much to implement. So that's a good thing to look at. Just check with the NRCS when that enrollment period is. And then here, there's been some confusion on this $20 per acre that got passed in that coronavirus relief bill in December. For some, well, we know why, but the media has been slanting it as though that bill got X'd out of the, or that $20 per acre payment got canceled when Biden got into office, which is not the case. It's actually passed into law. They're just waiting for Vilsack to get appointed, which should come this week for the USDA. And then at that point, they'll finish their budgetary review again, and they should start issuing those $20 an acre payments that were passed in December. What has changed, it sounds like, going forward is on the carbon credit end of things. That CCC money that was used for CFAP payments during the Trump administration now appears to be getting targeted more towards carbon credits and the such. So that'll be something that'll change, that we'll know more of here in the next couple of months. PPP money, if you're not a corporation on a farm and you didn't take the PPP money for payroll, which you couldn't have at that point, the corporations were able to get PPP money earlier. Now that PPP, the payroll protection money, is available to sole proprietor farms. And as long as you have $100,000 roughly in farm expenses for this tax year coming up here, then you would qualify for about a $20,000 PPP forgivable loan. So make sure you contact your banks to ask about that if you're a sole proprietor, not a corporation. And even corporations might qualify for some higher payments than they received in the first round of this stuff. So ask your banker about PPP money, because if you're an individual, especially that didn't qualify last time, there should be about $20,000 sitting there for you, of free money basically through that coronavirus stuff. This WIP Plus, that pays like if your crop was snowed down or extreme droughts. We had a few customers that had crops snowed down that might qualify for this, but other than that, we haven't had extreme enough droughts yet to qualify for much of that money. And there is Fish, Wildlife, and Parks money available for leaving your stubble height above a certain threshold as well, which we might look into on our farm now that we're using that stripper header. No changes to the crop rotations for 2020. We always have this chart available under the crop insurance education tab on our website. So if you guys are going to seed, for example, lentils on your farm this year, just find that in the column and then look down on the previous crops on the left-hand side, and it'll tell you how long of a break you have to have had between the last time you seeded lentils, which is 2 years in this scenario for the crop rotation stuff. So if you have questions on that, just find our little chart on our website or just call us. All of these crops have the earliest seeding dates that you can start and still receive a replant payment if something goes wrong with that crop, right? So wheat and barley, you can start seeding April 6th. The peas and lentils, March 25th, so that'll be the first crop you can start seeding here if we have an open spring. Flax, you can start April 11th. And then the canola and mustard, and those are crops that are as well worth waiting for this because they frost out easier. The first date you can seed canola and mustard and not receive no payment on a replant payment on your insurance would be April 15th. If you start before these dates and the crop makes it to where there's an established stand, then you still have insurance rolling through to the fall. It's just if something happens and it crusts in or freezes out and you seed before those dates, then you won't receive the replant payment. Just like there's early seeding dates, there's also the latest dates that you can seed the crop. So the first one that hits the expiration date would be your smooth peas. And Austrian peas, those are May 15th, along with canola, which is May 15th. So those are the two crops you want to target as getting done if you're getting late seeding so you don't get penalized on your insurance. The next one would be the chickpeas and the lentils, that's May 20th. And then you could finish up with your wheat and barley on May 31st. And then if you're going to seed flax, you have all the way up till June 10th to get that crop seeded before there's any penalties. So if you get way late seeding and you're looking for a crop maybe to throw in that would be a good fit for some late seeding without penalty in the insurance, the flax would be the best fit for that. There's also end of insurance dates. So this is if we get way late in the fall harvesting. Most crops are October 31st. The only ones that aren't October 31st for us are smooth peas, Austrians, and lentils. So if you get to September 30th and you're still trying to cut smooth peas, we need to get someone out there to appraise that crop because you've hit the end of the insurance date. Also, if we don't turn a claim in within a few days after the end of this date, like if you're cutting the peas and you forget to call us and it's got to be October 15th, they're getting stickier and stickier on the point where we may not be able to insure that period, or pay you on that claim. So what's on tap for 2022? So what are they looking at changing in crop insurance? This is some exciting stuff. So it appears they're going to have the rating figured out and stuff so that enterprise units can be set up by type for peas, lentils, and chickpeas. So you can choose enterprise units, get the big discount on that crop, and not have the lentils thrown together with the chickpeas and that thrown together with the smooth peas. That'll keep them separate by type for you guys, which would be way better for a claim scenario. Also on spring wheat, durum, and winter wheat right now, if you were to choose enterprise units, they would throw all those types together for your loss payment. It appears we're going to be able to separate spring wheat, durum, and winter wheat into separate enterprise units in 2022, which would be a huge deal too. Probably also, like we have here, lots of changes probably coming with the new administration, with their change on the focus towards soil health and such. So with the new administration, right or wrong, things are just going to change as far as their focus on the rules. We just won't know going forward, but I'm sure some things are going to change on the crop insurance side as well. On the malt barley endorsement, the only big thing that changed is the feed price used to be based off of the corn futures market price. Now it's going to be kind of like peas work, where they're going to call around all the local elevators and get a average feed price for what you could receive at the elevator for your feed barley for processing your malt claim. The only time this is ever going to come into play is if your barley doesn't make malt, and we got to figure out what feed barley is worth compared to what your malt contract was worth to reduce your bushels. So sometimes this will certainly be more accurate. Sometimes it may not be more beneficial though. So for example, last year we used the corn market price, and they figured that feed barley was only worth $2.90 a bushel, where a lot of you guys were getting $4 a bushel on the local market for feed barley. If you would have had a malt claim, then you would have got a bigger reduction because we would have used the $2.90 a bushel price using the corn market. This could also flip-flop the other way around, where corn might be higher but feed barley is lower. It would benefit you to use the local market price, but that is a change anyways. Flax and hemp were added in 2020, so if you seeded any of these crops before, since it wasn't insurable before, we need to know which years you grew those crops in and what the yields were for those years, and we need to certify that. If we don't, you won't be a new producer of that crop, and you'll only get 65% of the county average the first year, 80% after you have 1 year in history, and then 90% the third year. So specifically with flax, I'm sure none of you guys really have probably done hemp before, but if you did flax sometime prior to when it was insurable, please get us that history if you're going to seed it going forward here, so we can make sure we get the best yield that we can for you. Flax was new in 2020, and it was added to all these counties up on the High Line basically. So from Glacier County all the way over to Scobie-ish area in eastern Montana, flax now is insurable. As far as growing flax, if any of you guys are interested in that, it's the same weed control as peas basically. So you can use Spartan pre-plant, which is a great broadleaf chemical, clethodim for the grasses, and then if we have some sort of weed escape problem, we can actually go in there even with bromoxynol and MCPA, or like Wildcard Extra or Brox-M, and clean that stuff up. So kind of a cool crop. Pretty flexible on the chemical stuff, really high in mycorrhizal fungi. Can have stubble issues with seeding back into heavy flax residue. Especially with a disc drill as far as hair pitting possibly, or with it raking up with the hoe drill. We're going to cut ours with our stripper header to hopefully leave all that stubble stand. But the price is really high in this crop this year on some of the contracts, like 11, 12 bucks a bushel. So that may be something to consider if you're looking for an alternative crop for your rotation stuff. The disadvantage on the insurance is there's no enterprise units for flax, so the premium is considerably higher than all the other crops. No rotation restrictions, so you can seed it onto anything if you want. And then we went through the planting dates. The conventional price right now is 10 bucks a bushel. I suspect there may be an additional price release before the 1st of March here on that. And then organic flax, if you're an organic producer, is $33 a bushel and has kind of comparable yields to conventional. So that may be a crop guarantee-wise that's really worth looking at on the organic side of things. These are just map areas and what the yield will be for flax starting out in our counties. So for Toole County, if you're in map area 4, the stuff by the hills, or Etheridge, those two map areas about 17 bushels. Map area 2, which is kind of where our farm is in the middle of the county and the bulk of the county, kind of would be 13 bushels starting out. 15 bushels for Liberty and Hill counties, and then 16 bushels for Glacier and Pend Oreille County. To insure hemp, you have to have 1 year experience growing it. You have to have a license to grow it. If it ends up being over 0.3 THC content, which I think they may have adjusted this a little bit now, but if it gets over that during the year and they're testing it, it's going to be an uninsurable cause of loss. There's a lot of quirks in this hemp program, so please just call us if it's something that you're looking at doing, basically. I'm just going to skip through the rest of the hemp for now. Camelina contracts, those are still around. Now they can be insured, it appears, the way the contract is structured. But the highest level of insurance available is only 65%. So you can see in this slide below here, there's not a very good guarantee. This is area 4 actually in our county. You're only going to start out with a 500-pound yield. You can only insure it at 65%, so you'd be guaranteed about $60 an acre in this scenario. For Camelina, the premium's only $5.36 an acre, but your guarantee is only $60. So that makes that a pretty tough crop since the contracts aren't as good as they used to be as far as risk for us to limit that for you. So insuring canola, that's actually something that might be attractive because the price is closer to $10 a bushel now. XS10 is the only product offered on hail insurance. That means that if you take $100 of insurance out on the hail insurance side for canola, we can only ever pay you $90 back. There's a mandatory 10% deductible on that crop. It's because it's so hard to count, and the damage numbers are really high if we get any kind of hail event. So it's kind of their way of making the premium look more attractive, but you're really only getting $90 of insurance if you're taking $100 out. And it's usually 10% higher than DDA on barley for premium. And the state hail policy is a basic policy, but the premium's rated really high on it, so we're usually cheap enough through this XS10 that we outcompete the state on that deal. The multi-peril side, April 15th, like we said, is the earliest planting date for canola, so that's the first thing to watch, is you have to kind of wait with this crop to seed it. That's because of the frost risk. That crop's really susceptible to frost if it comes up when it's little. So the replant payment would be 20% of your guarantee, or 175 pounds, whatever's lowest. You got 175 pounds, it'd be 20 cents a pound now, so you'd probably be closer to $32 an acre for the replant. Most of the seed companies will replace it too if it fails, so this will kind of pay for your machinery costs to run back over that. If you seed before April 15th and it dies out from a frost or gets crusted in, we're not going to pay you that payment, right? And then the weird thing with this crop is you only have a 30-day window to get it planted before we start to penalize you as well on the crop insurance. If you seed it after May 15th, there's a 1% coverage penalty for the first 5 days, and then a 2% penalty days 5 through 10. So in this example, we seeded 10 days late. We got a 5% penalty the first 5 days, right? And then 10% for the next 5 days that we're late, because they take that times 2. So we lose 15% of our coverage with the same premium just by seeding 10 days late. So it's also really important to know where you're at in the county for these crops for guarantees. Because for an example, in Toole County, we have 4 different map areas now. If you're in the better areas of the county, you'll start with around a 1,300 pound canola yield. At a 75% level, at 20 cents a pound, you'd have a $195 an acre guarantee on canola. If you're in map area 2, you only start with an 800 pound canola yield. 75% level times 20 cents a pound is only $120 an acre. So it could be that just across the road, your guarantee might drop from $195 to $120 an acre just because of what map area that you're in. So if you're going to do a crop like this and you're not really sure, it's the first time you did it, you're not sure what your yields are, just check with us and we'll check which map area you'd fall into, what your guarantee would be. So contract pricing on canola is only allowed if it's high oleic canola type like Nexera. Those guys don't do act of God contracts, so we've never really found where contract pricing fit on the canola side of things yet. Hopefully they switch that so that we can use contract pricing for the other canola types, because there are some act of God contracts on like this fish oil canola that we could apply if they would switch the rules around. Can't use contract price. Oh, can use contracts to price all organic canola types. So this is another organic crop that has really high guarantees in some areas. Like your starting yield might be 1,000 pounds on organic canola right now in area 4 in Toole County, and you might have a 34-cent contract or better. So your guarantee on canola for organic might be $300 an acre. So another crop worth looking at if you're doing organic. So enterprise versus optional units. If for some reason you only see 2 sections of canola and you leave it in optional units, and they're kind of next to each other, and you don't switch that to enterprise, you're basically pouring money down the toilet, as this thing shows. So how do I qualify for enterprise units? You have to have 2 or more sections of the crop seeded to 20 or more acres each to qualify for this discount. Now, that being said, it might be that you seed 20 acres in one section and 600 acres in another, and you still qualify for the same discount on this program, and it's substantial. Some crops don't have enterprise units, like mustard or flax, for example, but the bulk of the crops we insure do, so understanding this program is really important. If you seed 120 acres in one section or one unit and only 15 acres in another, you won't qualify for this enterprise discount, so make sure you get over 20 acres in that second section. You can also do enterprise units by county, so if for some reason you seed 40 acres of canola in Toole County, 20 acres in Ponderay, that would qualify you for a multi-county enterprise unit, and you would get the same discount. It's just going to blend them across county lines for your claim. So here's a comparison in the enterprise unit versus optional unit discount on canola in map area 4, let's say. So on this canola crop, your guarantee is the same at 75% coverage level. You're using the same yields and stuff. It's just whether they're going to combine those sections together on a claim or they're going to keep them separate for you, like in an optional unit. So for combining those together on your claim end, your premium goes from $16 an acre in an optional unit down to $6 an acre in an enterprise unit. In our previous example, if you seeded 600 acres of canola in one section, you wouldn't qualify for enterprise units, so you'd pay $16 an acre for the insurance. If you seeded 20 acres down the road in a separate section, that would qualify that then for an enterprise unit. You'd only pay $6 an acre then for that same canola coverage. So that's where it really makes sense, is if you're only going to do something in one section, make sure, if you have the land to do it, to go seed 20 acres in another section and get this big discount. One more thing to understand is on the pea and lentil quality adjustment stuff, if they go US number 2 or less, and you get paid a lower price for that reason, they will take the lower price you got paid. In this example, number 3, lentils, we only got 15 cents for. Number 1s would have been worth 25, and you harvest 10,000 bushels. They're going to divide that 15 cents a pound you got for the number 3s into the 25 cents you should have got for the number 1s. You only receive 60% of what you should have had for the price because the quality was down on these lentils. And they're going to reduce the 10,000 bushels we cut of lentils down to 6,000 bushels to hopefully trigger a claim or pay you more on that claim. So if you have quality problems on peas and lentils, let us know right away. Those samples have to be sent in within 30 days of harvest. So it's always best at harvest to send those off to the state if you have any question, or have an adjuster come take them and send them off for you so that we can get you paid for quality issues on your peas and lentils. It's a timely thing. Enterprise units on peas and lentils can be a huge discount, but they're also going to throw the 2 different types together when they pay your claim. So in this example, your lentils came in $40,000 above your guarantee on that crop. Your peas, for some reason, got hailed out or just didn't do well, and they came in $50,000 below your guarantee. So the peas were $50,000 into a claim. The lentils were $40,000 above a claim. When you do enterprise units for this next crop year still, it's going to throw those 2 types together before they pay your loss. So your loss would have been $50,000 if these were optional units. Your lentils were $40,000 above a loss, so we're only going to pay you $10,000 in a loss payment in this example because the peas did so, or the lentils did so well. So the good thing about this is, if you have that blend of crops, the one crop did better than your guarantee, so you should still shake out well enough in the end anyways, especially when you figure the savings on the premium guarantee or the premium amount on the back side of this. The important part is just to understand how this program works, so when you get into a claim, you know they're going to throw all these together in one pot if you take that enterprise unit discount. Premium difference on pulses can be substantial, so this is a chickpea example from back when the price was so high, but to have chickpeas in optional units at 75% would have been $39 an acre. In enterprise units, that drops that down to $16 an acre. So over $20 an acre difference to keep it separate in optional units versus combining it together in enterprise. There's chickpea specific rules in your crop insurance. Only Ascochyta resistant varieties are insurable. That's most everything we grow, but if you're growing some off variety, let us know. We'll make sure that that's on our list here. The seed must be treated with recommended fungicides to prevent Ascochyta blight and seed-borne diseases. So if you don't treat your seed with a treat that's labeled for Ascochyta blight, and those things get Ascochyta, and that's what actually causes your loss in the end, technically you would be out on the crop insurance as far as a loss payment. So we don't treat our chickpeas anymore on the farm, but there is risk in doing that, because if there's an Ascochyta problem and they can prove you didn't treat the seed for it, you'd be out of luck on a claim. If you choose to plant your own seed, it used to be that you had to have it tested for Ascochyta blight and prove that it came in lower than a threshold for that. They took that away now, so at least you don't have to send the seed off to get tested. Cover crop guidelines. Spring seeded cover must be terminated 35 days prior to planting a fall crop. So don't go spraying your cover crop out July 31st and then seed winter wheat August 1st. Technically it won't be insurable. Or if you do that, get a letter from an ag expert saying that that was okay. If you want to qualify for summer fall of the next year on ground you have cover crop seeded on, it has to be sprayed out by June 1st and can't be hayed or grazed at that point. So hopefully they change this. That's an incredibly stupid rule. They want to promote the soil health stuff. Hopefully that rule changes as we roll forward into these next crop years. But as of now, there's basically no way to have that be considered summer fallow, unless you just spray it out by June 1st and just let it sit. Fall seeded cover can be seeded any time in the spring as long as winter terminates your cover, which it would here, obviously. So if you want to try some fall seeded cover crop, or you want to do full season cover and then just let it winter kill the next year, you could seed it to any crop you want. It's just going to be recrop. The other thing to realize is rotation restrictions apply to all the plants in your cover crops as well. So don't put smooth peas in your cover crop and then seed smooth peas the next year on your crop insurance, so the smooth peas in your crop insurance won't be insurable. So SEO, this is the county disaster program that's paid so well through our agency. It's triggered at the county level, so when the county gets below 86% of average for any of these crops, it triggers payments on your guys' crop insurance policy. It's full payout when the county reaches the multi-peril election level that you're at. So, for example, if you had 75% coverage level on your spring wheat, and the county had a poor year on wheat, or the price dropped enough to get the county to 75% of average, once you get to 75% of average on the county level, you get all your SEO money. We have extensive videos covering SEO and ECO that you guys can spend more time going through, but just know this is paid really well.
Sorry, I'm having trouble hearing you.
This is paid really well in all the counties that we've had this insurance in. This year is a new exciting program called ECO they added as well, which triggers at the county level just like SEO, but allows us to insure up to the 95% level. So if the county had a poor year and you had a poor farming year, like if we hit a drought, you could potentially get paid all the way up to 95% of your guarantee on every unit on your farm instead of being stuck at 75%. ECO would trigger by the county just like SEO, so it might trigger in some years when your individual farm doesn't, and vice versa. It pays out completely when the county reaches 86% of its average, so when SEO would start to trigger, and it's triggered by crop and type. So you can stack then SEO and PLC on top of each other. That's been a real winner for us. And now you can stack ECO on top of that as well. So we could actually end up realizing more than 100% of our guarantee in payments if we had a really poor year, between PLC triggering for poor prices, ECO and SEO triggering to get us up to 95%, and then our individual farm level triggering as well if we hit a drought. Historic payouts we can now run through our quoter and NAU, so we can show you what you would have got paid backwards on these crops on SEO and now on ECO as well. The one thing with that ECO program is it's not available till this fall on wheat, but it is available on all these other crops. So really quick, like if you guys ever want to go on YouTube and watch our extensive video on ECO and SEO, I run a bunch of these scenarios and explain this more in depth. But Toole County, if you would have been in ECO and SEO the last 5 years, you would have paid $56 in premium on the barley, had a $219 an acre payout. This is considering a 45 bushel barley yield unit that I ran this on. you would have netted $163 an acre over what you paid into premium on this program. Most of you were in SEO, so you know this paid out really well as well. The SEO has a little lower guarantee, of course, than ECO, SEO stacked together, but the premium's less. So only $12 in premium with just the SEO in this scenario. $75 payouts, so $63 an acre net return to you in these bad years we had in Toole County. Glacier County winter wheat, just SEO, $16 in premium in the last 5 years you would have paid in, $70 payout, or you would have netted 54 bucks an acre on like a 35 bushel an acre wheat unit, I think this was. Glacier County barley, ECO and SEO stacked together, netted a $48 return over the last 5 years, had you had ECO available then. Liberty County barley, ECO and SEO would have netted $78 an acre above the premium. And then Hill County wheat, so I threw a Hill County one in here too. You would have paid 12 bucks in premium on SEO for wheat, netted $100 an acre. This is like on a 35 bushel an acre unit as well, or netted $88 an acre in that program. So I ran a whole bunch of scenarios in that other video you can look at, and this program has always historically paid out more than you pay into it. It really helps a lot if you hit some bad years, like some multiple drought years like we did in Toole County. We are way ahead of the curve on this program, and it saved a lot of people from really going backwards in these tough years when the prices dropped too. And then Hill County lentils, last scenario, all run $57 in premium, ECO and SEO together. It would have paid out $179 in payout, or $122 in net return above if you weren't in these programs at all, right? So here's our suggestions for 2021. I'll wrap this thing up because I know this gets kind of long. Always choose RP if it's available on a crop. There is so much price fluctuation and so little difference in the price between revenue protection and yield protection that you should always be in revenue protection, unless there's some weird organic crop reason or something that doesn't fit. So SEO is an awesome way to add coverage for drought and market declines. I like putting PLC and SEO together rather than choosing ARC, because ARC's really unlikely to pay going forward anyways on the FSA side. And the SEO and ECO can trigger together, which really stacks payments nice for you. 75% enterprise units seems to be the best value if you can do enterprise units in the crop. If you can't, 70% in optional units seems to be the best value. And then if you have a malt contract, the malt endorsement's well worth the money. I know they keep changing the rules, so it makes it a little harder to get paid. But we've had multiple years of either hail/rain events that trigger bigger payments on this, or it's just better protection as far as dollars per acre you're insured for if we hit a big drought too. So thank you so much for sitting through all this if you did make it through it, and please feel free to call us if you have any questions.